The next thing that I want to talk about is money management, because money management is what separates people, and it's not taught. So I want to take the next 10 minutes or whatever and talk about money management. And this is specifically for anyone whose account is down for 2018. Okay? If your account's down in 2018, you should go back to paper trading. You should go back and prove it to yourself that you can make money. Because the worst thing that could happen to you is your account's 50K, and then you spend 2018 learning it's different, trying different things. You get more comfortable, you get confident, and your account's down to 42K. And then you just paid 8K for education that you didn't need to do. So let's use the example of a $50,000 trading account. So for a $50,000 trading account, and if your trading account's 5, if your trading account's 500, it's all the same. If you have a $50,000 trading account, the only number that matters is this. That's it. Some of you were on the presentation that I did with my friend Collin. Collin's a professional trader, has been trading with me since 1999. And I asked Collin, Collin, what's swing trading? He said, I don't know. I'm like, you never heard the term swing trading? No. Funny enough, guys, I never heard of the term swing trading until I started working with retail traders. Everybody wants to classify themselves as a credit spread trader, as an SPX trader, as a day trader, as a swing trader. We want return on capital. Sometimes the best opportunity will be shorter term trades. Sometimes we'll have to hold longer term. There are different kinds of products that have different rhythm. Some we have to hold longer, some we have to hold shorter. Those are the experiences that you have to learn, and that's building your memory bank. So overall, when you have a stop, your stop should not be on the individual position. Your stop should be on this number. So if 50K is here, and that's the value of your account, and it starts dipping, you want to lower risk. As the market goes down, your risk should come off. You should start being careful. You should start trading smaller size. If your account goes from 50 to 47 to 46, you should be trading half the size that you trade at 46 than you did at 50. Too many people, when they start losing money, they increase their size because they want to make it back. They remember where the account was, and so they're tunnel vision to try to get to that number. It's a sucker's play. The market doesn't care where your account was. How I teach is I want you guys, anybody new for sure, take a week, take 7 days or 5 days and trade on paper. Have the goal to make 1K on paper by week's end. And then chart. If you do, day 1, day 2, day 3, day 4, day 5, make 200, make 300, make 300, lose 700, make 100. If this is you just made $200, you don't graduate. You have to do this exercise again. Do this exercise again and again and again until you're able to reach your goal of 1,000 on paper. After you do that, do the same exact thing and try to make 5K. Okay? Or 3K, whatever it is, on paper. Keep doing the same exercise until you prove to yourself that you can make 5K or 3K or whatever it is on paper. And then, only after you've done that, do you go live. And if you go live and your account's 50K, week 1, Try to make $1,000. Keep it slow. You're in that building stage. It's not about the money. It's about building confidence and proving to yourself that you can do this. So all that matters is if you're trying to make $1,000 in this week, well, you don't want to risk $2,000. So just take it slow. Be super, super focused. If the market shows you a little something, all that matters is this number. So on day 1 or day 2, if you're down 100 on the first day and on the second day, you're up $600, but you still think the position is going to work better and better and better, lock in profit. Lock in profit. You're up 500. You're half the way to your number 1 goal. It doesn't matter about what you think about the market. All that matters is your goal. You need to be tunnel vision, unbelievably focused on the 1,000. Unbelievable tunnel vision on the 1,000 on paper. That's all that matters. And if you can't do it, start from the beginning. And by doing that, if your account's 50,000, it's not going to go down to 30K after 3 years because you've been learning and feeling like you're benefiting and you've tried everything that's out there as under the sun and you're trying a new indicator, but you don't really know how it works or the math behind it. Stay on paper, go through these exercises, prove to yourself that you can make it work, and then get in there and risk live money. That's what I would do. And if I was backing any one of you, if you were working directly for me, I would need to see the data and every single trade in order for you to prove it to me that you can show me return on any money that I invested in your trading account. It's hard. But by doing it this way, you will protect yourself. It's going to give you discipline, but you need to fall in love with your account. It's all that matters. Okay? So when the week ahead comes out, that doesn't mean let's just load into every trade on Monday. Wait for opportunity. Stacy Bravitz, a long-term member, he likes to say he wants to trade the spreadsheet, but he wants to make sure that the levels that he gets are better than the levels that I share on the spreadsheet. I love that. I think that's great advice. So trade the spreadsheet, but try to get levels that are better than the levels on the spreadsheet, because the names that I'm sharing with you, because we're buying options, you have to understand they're volatile, right? You look at a name like Will. It's a volatile stock. All of these are going to fly around. So wait for special entry points. Wait until the previous you would have been involved, the previous you would have been frustrated, the previous you would have been all invested, scared, but now the new you is waiting for that perfect level and then getting in. Having the discipline to wait. Not feeling like that FOMO that you're going to miss out on something. Okay? FOMO is nonsense. It's something that people create in their own head. It's not real at all. Okay? So that would be my advice. It's a very different approach. It's something that's worth learning. The juice is worth the squeeze, but you have to commit the time. From experience, it takes 3 months for people to really get comfortable. And it might take longer for, once you start incorporating all these other kinds of trades that we do. The number one trade I would suggest for you right now, learning, is the elite earnings trade. The elite earnings trade is something that you can use 50% out of the year. It's such a powerful trade. Now the lockups, I love lockup trades, but they're few and far between. When they present, they're great trades, but it's not a full-time gig just trading lockups. Gold, silver, that trade makes a ton of sense to me. Using that gold-silver ratio. Easy way to use that. What do you think about that? Can you put a yes in the chat if that makes sense, guys? This whole exercise that we're doing. And what do you think about it? Does anybody have any feedback about this? Are you willing to do this? Is it too difficult? Is it too boring? Do you feel like you need more action by being involved in the market? Cool. Okay. Thank you, guys. That's really, really sweet. I'm going to share a lot of these. This is great. A lot of more on this. Action, very good. It's so important. Been doing it for so long, guys. Patience is by far the hardest part. And then what I did forever, and I don't do anymore because I can do it in my head. So if your P&L and your time as days go by, when your account's like this and you're doing good, that's when you get aggressive. Trading is all about, like the next level is all about going after it when the getting's good. When the trade's good, you want to have your biggest positions on. It's very similar to blackjack, very similar to poker. When the trade's not as good, and maybe your P&L is doing like, you make money, but then you big drawdown. Then you build it back up, big drawdown. When this happens, you need to ask yourself, how is the trade? Do I feel confident? Do I feel like it's a good trade right now? If the answer is no, size down, be conservative, protect your account. Okay? When the trading's good, and you guys have seen times where it's a little bit easier, everybody can make money. The problem is when the trade gets bad or when the trade gets more difficult, how much risk do you have on? What kind of damage are you going to do? Because many of you can make money. You grind out, you make money, you're having fun, you get more confident, and then all of a sudden, boom, you get that one day, and now that one day happens, and now you start thinking like, okay, I stink. You get all negative in your own mind. I can't do this. I stink. I can't believe I just did that. And it goes against you, and you put on more because you can't take a loss. It's just too big, and it just parlays on itself. This happens to everybody. You need to be able to learn these lessons with as little capital as possible. And this is going to happen when you're trading live, no matter what. But you want to try to get as many mistakes out of the way before you're live, because you're going to make mistakes. It's just a matter of when you do, how much is it going to cost you? Okay? Without a doubt, guys, and everyone's saying it, everyone agrees, this is the important stuff.